Hello traders, welcome back to our channel. In today's lecture, we're diving deep into a powerful concept that can transform your trading strategies, the silver bullet. Get ready to explore its key principles and how to implement them effectively in your trades. Let's get started. The silver bullet strategy is designed for traders looking to capitalize on high probability trade setups by focusing on precise timing and clear market signals. This strategy revolves around pinpointing specific market conditions, timing your entries around key price levels, and responding to shifts in market structure. Unlike many trading strategies that rely on vague indicators or guesswork, the silver bullet hones in on the most important price movements that occur during a well-defined time window. This model works exceptionally well in fast-paced markets, offering traders an edge when trading volatile assets or major currency pairs. Whether you are a day trader or a scalper, the silver bullet provides a structured, rules-based approach that reduces emotional decision-making and increases your ability to trade with confidence. If you're looking for a reliable way to capture strong market moves with precision, this strategy can help you achieve just that. The core principle is to stay patient, wait for the market to show its hand, and then strike with accuracy when the conditions align. So here are some checks that you have to follow. Step 1. Mark the 9 a.m. hourly candle. Start by identifying the 9 a.m. hourly candle on your chart. This candle is crucial as it often sets the tone for the market's movement during the upcoming session. Whether you're trading a major currency pair or indices, marking this candle will give you a reference point for where the price may react later in the day. Step 2. Drop down to the 1-minute chart. Once the 9 a.m. candle has been marked, switch your chart to the 1-minute time frame. This lower time frame allows you to zoom in and analyze the price action with greater precision. It is particularly useful for spotting shifts in market structure or sudden bursts of momentum that are harder to catch on higher time frames. Step 3. Mark the time window. The next critical step is to mark the time window between 10 a.m. and 11 a.m. This is when liquidity tends to be more active, and significant moves often occur. Monitoring this specific time range allows you to anticipate volatility and be ready for entries when price aligns with the strategy's criteria. Step 4. Wait for market structure shift or change in state of delivery. Patience is key. Before entering a trade, wait for a market structure shift or a change in the state of delivery. This occurs when the price either breaks a significant high or low or shifts its delivery pattern, signaling a potential reversal or continuation. The shift often acts as a confirmation that the market is ready to move in your favor. Step 5. Place. Stop below the swing that creates CSD. Once you've identified the structure shift, place your stop just above or below the swing that creates CSD above or below the swing point that created the CSD. This ensures that your stop is in a safe position, protecting your trade while allowing enough room for the market to move without being prematurely stopped out. The silver bullet strategy is all about timing, precision, and patience. By focusing on key time frames and market structure shifts, this model offers traders a strategic way to enter the market with reduced risk while maximizing profit potential. Keep refining your ability to identify these shifts, and the silver bullet strategy can become a valuable tool in your trading arsenal. Let's head over to the live charts and find some real-time examples to see how this model works in the live market. We'll go through each step together and analyze how the silver bullet strategy plays out in real conditions. In the first example, we have the Australian dollar versus US dollar hourly chart, and you can see the 9 a.m. candle print out. So we mark the high and low of that candle. We mark the high and low. Next, we drop down to the 1-minute chart. So now we are on the 1-minute time frame, and we will wait to sweep the high or low of the 9 a.m. hourly candle. Let's see how it plays out. Now here you can see the price takes out the low of the hourly candle, and now our focus shifts towards the CSD or market structure shift. So we wait for a market structure shift or change of delivery. Here you can notice the price closes above the last down close candle, so we mark that as a CSD, and we enter a long position by placing our stop loss just below the order block, and we will target the high of the hourly candle. So let's check how it plays out. You can see prices respecting the down close candles and moving towards the high of the hourly candle. And here we go. You can see how the prices reach our target. Guys, this model is simple yet highly effective. By focusing on key levels like the hourly candle and waiting for a clear shift in market structure, you can consistently find high probability trade setups. So here we covered our first example. Let's move on to the next one. In our next example, we have the Euro versus US dollar 1 hour chart. And as the 9 a.m. candle has closed, let's mark the high and low of that candle as our silver bullet price range. So we have marked the high and low. Next we switch to the 1 minute chart to look for our setup. Here we are on the 1 minute chart, and we will wait for the price to run through the high or low of our hourly range. Here the price creates a spike. Maybe it's a red folder news event. So we stick to our rules, and we will wait for the price to create a CSD or market structure shift. Then we enter off of an order block. So let's see what happens next. So we finally run through our range high, and we wait for an indication. So let's see how it plays out. And you can notice the price closes below the last up close candle. So we consider it as a CSD, and we enter a short, just putting our stop above the order block, and we will target the low of the hourly range. Let's see what happens next. You can notice price shows displacement to the downside, and then retraces back. So we will wait until it reaches our target. And here we got it. Our final target is hit, offering a very high RR trade. This is the power of the silver bullet. It's simple, effective, and a very high risk to reward strategy. So we move to our third example, and we are on the GBP/USD hourly chart, and the 9 a.m. hourly candle has printed. So let's move further and mark the high and low of that candle as our range. Now we have marked the high and low of that candle, so we drop down to the 1 minute chart to find our entry. Guys, we are on the 1 minute chart. We wait for the price to run through the high or low of the hourly candle, and after that, we look for entry confirmation. Here you can see the market creates a spike, but didn't create a CSD or market structure shift. So we will wait. Let's see what happens next. Here you can see the price closes above the last down close candle by creating a high probability order block. So we mark that order block and wait for a retrace back. Let's see what happens next. And here you can notice the price retraces back to our zone. We enter a long position by putting the stop loss just below that order block, and we will target our range high. And here you can see the price shows willingness to go higher. Let's see what happens next. You can notice the market consolidates a little bit and then moves higher and finally reaches our final target, offering a very high RR trade. You guys can see how this strategy works and offers very high risk to reward trades. Believe me guys, it's very effective and a high win rate strategy, so you have to go to your charts and backtest, and the results will be shocking. So we move on to our final and last example. We are on the gold hourly chart. The 9 a.m. candle has already closed, so we mark out the high and low of that candle. Here we have marked the high and low. So let's drop down to the lower time frame, 1 minute chart, to look for our trade setup. Guys, we are on the 1 minute chart, so we will wait for some buy stops or sell stops to be run. Let's see how it plays out. Here you can notice the price takes the high of our range, and we will wait for a CSD or MSS. Let's see what happens next. You can see the price closes below the last thick up close candle, so we mark it as a CSD. Now we wait for the price to retrace back. As the price retraces back to our order block, we enter a short position by placing our stop just above the order block, and we will target the low of the hourly range. Let's see what happens next. And you can see how the price moves toward our draw on liquidity, offering a very high risk to reward trade. To achieve consistent success in trading, it's crucial to always stick to your rules and avoid deviating from your strategy, particularly with silver bullet, which thrives on precision and timing. Before entering any trade, ensure you've calculated your lot size based on your account size, with a risk no greater than 1% per trade. Effective risk management is essential for long-term capital preservation. Focus on mastering the silver bullet by waiting for clear market structure shifts or a change in state of delivery. Regularly backtest and forward test the strategy to refine your approach, gain confidence, and identify optimal entry and exit points. Patience and discipline are key. Don't rush into trades and wait for proper confirmations. Following these principles will help you become a more consistent and confident trader, leading to improved performance. For more content and trading insights, make sure to stay connected, like, subscribe, and share this video. Good luck, traders, and see you in the next one.